I said it once, I'll say it again. Happy holidays! But I'm not talking about Christmas or New Year's. I'm talking about the upcoming U.S. holiday known as Martin Luther King Day. So today, I want to discuss trader types, pattern trading, and how to trade these U.S. holidays along with option strategies. Hey, Tom Gentile here. Over the last several years, I've educated my group to a variety of trading systems and strategies. What I don't know about is you and your experience level as an individual. So I want to start by placing you in one of the three buckets that I'm going to talk about right now, because I believe a trader evolves into three levels. First is the novice level. This is where you take careful steps because you know that the markets are confusing. You know very little, and what you don't know is a lot. And because of this, you're going to double check everything and you're going to invest very little. It's like dipping your toe into the pool to gauge the temperature. Now, once you've had a bit of success and experience, then you enter what I call the most dangerous part of trading. This is where greed and fear take over, and objective trading is thrown out the window. In this area, traders react first and analyze second. They typically overbet certain trades, and if they lose, they will greedily double down, even further deviating from a sound trading plan. Most traders don't make it past this phase or this level. So where are you so far? Are you in level 1 or level 2? Now, if you've managed to make it through both of these levels, then you're graduating to level 3. You're out of the danger zone. You're moving forward in an unemotional and objective way. I call it rules-based trading. Now, rules-based trading objectively works more than anything else that I've ever used. The majority of my rules-based trading involves patterns. If you know anything about me, I'm a pattern guy. One of my favorite short-term patterns involves U.S. holidays, and there are now 10 of them that I follow. Over the next 30 days, 2 of these will present themselves for weekly strategies. Now, the pattern is very simple. You find something that has a history of being profitable around the U.S. holiday. Maybe it's going to be a week or two before the holiday. Maybe it's going to be a week or two after the holiday. And you look for a buy or sell opportunity that works time after time after time. Let's take a look at the upcoming MLK holiday. Now, I got a bold statement to make because I've already done the research. Buy the SPY 1 to 2 weeks before MLK Day. Better than taking my word for it, let me break it down to you the only way I know how, with quantitative data. So, on this table, you can see I've used my proprietary tools to take a look at the past 10 years on SPY and analyzing anything that happens with this asset 10 days or less to MLK Day. This asset is SPY. Now, you can see each column that shows at the top. There's the years researched, the days before and days after the holiday, average percent, average profit, buy or sell, and finally, accuracy. Now, as a pattern trader, I like to see bunching. And what that means is I like to see all the colors the same way. All of these are blue, which means that I see all buys on the screen. So this is a true test of a potential buying opportunity around MLK Day. Now, take a look at this chart. This is an actual chart of SPY. This is the top row of the pattern. When I click on it, I get this chart. It shows me that this pattern being bullish on the SPY 10 days before MLK Day and closing on the Friday before the holiday. Now, that top line resulted in a 0.84% average over this week of trading, the SPY. Can we do better? Well, take a look at line number 3. Line number 3 shows a pattern that goes 8 days before MLK. And now this position, while it only brings in 0.8%, is 80% accurate. So pretty much the same average return based on a day per day basis, but with a higher accuracy rate. And we can see on the screen here, the 8 years this pattern was up and the 2 years, 2016 and 2022, when the pattern did not work. Why does this work more often than not? Well, one can attribute the price pattern occurs because of perceived optimism. Maybe there's a more peaceful mindset as you reflect on the holiday and what it means to you. It's American to be bullish, and this in turn leans into the upward market. Now, these moves might not sound like much, but keep in mind the average moves in the index markets are quite small when you compare it to the average stock. Profits are less, but the risks are too. If you want to add some alpha to this trade, I can give you two ways to do it. Number one, simply find a stock that highly correlates to the S&P 500 but has a more positive beta. And voila, you got something that's going to move faster and produce more profits if the move is profitable. Now, here's a list of the top 10 stocks in the S&P 500 by correlation that I pulled up right now. And then what I did was I re-ranked these stocks by which ones are the most bullish. So you can see at the top of this list, Equifax right now is running 93%. What I mean by that is that it's very, very close to yearly highs. All right, S&P Global was something that tracks the S&P quite well, but then Eastman Chemical comes in number 3, just about maybe 13% off its highs, but it's in the 80s. But if you're looking for something that you could trade during the MLK holiday, Equifax has been moving quite well and is very, very bullish right now. Now, another way to leverage returns is through short-term option trading. And what I'm talking about is trading calls. Buying a call is being bullish. So if you were to look at, say, buying calls on SPY, I would look out to the weekly calls, the ones that expire after MLK Day. Again, buying before the day, well before the holiday, but selling the day before the holiday actually occurs. That's how you can boost your leverage and your profit potential, all while limiting risk. So there you go. That's my video for the week. And here's to the upcoming U.S. holiday. See you soon.